The demand for Tesla to buy back some of its shares is becoming intense by the day. Several people respect Tesla products and its strategy. However, some believe that with the recent drop in the value of Tesla stock, the company will have to do a lot more to maintain its financial status, especially for Tesla stock investors. Although several Tesla bulls may be less worried about the drop in the company's stock price, there is no doubt that if the stock price continues on a downward trend, a lot more investors may be forced to sell off their shares. Hey guys, welcome back to Everything Tesla Stock. While Tesla is yet to make a move concerning its share buyback, it is certain that the company is not oblivious to the needs of its investors. Over the last years, several analysts have shared their opinions about a buyback of Tesla and what this could do for the company's stock price. But a longtime Tesla bull named Gary Black has taken things a little bit further after he sent an open letter to Tesla's management, citing the numerous benefits that this can have on the company and its stock. According to Black, Tesla is well poised to record enormous returns from buying back its shares, and as well as providing huge valuations for its investors. Why does Gary Black think that Tesla needs to buy back some of its shares from the stock market? Keep watching to find out, but before we get into it, don't forget to like and subscribe and turn on notifications to keep up to date on everything going on with Tesla. Gary Black, who is a managing partner and co-founder of Future Fund, disclosed this in an open letter to Tesla's board of directors. Black is a long-time Tesla bull, who has constantly revealed his bullishness on Tesla and its stock. According to the Tesla bull, Tesla is the largest position in his firm in terms of its stock portfolio, including flagship Future Fund ETF, which is an NYSE-listed high-conviction ETF. Black stated that since Tesla stock is now valued at its lowest forward PE ratio since the time of the pandemic, with an investment-grade credit rating now in place, the company could consider an aggressive multi-year stock buyback of at least $10 billion. He further stated that he would prefer that a new buyback comes from excess cash, and that Tesla preserves its debt capacity. Black believes that by doing so, Tesla can rake in returns and consequently drive up the value of its stock. Stock buyback has been profitable for companies like Apple and Google, and just maybe Tesla can record the same levels of profitability too. According to Black, a stock buyback will give Tesla's management high flexibility to turn on and turn off opportunistically, especially at times like this when short-term noise is depressing shares. It's no doubt that Tesla stock has been down in the past few weeks, with the stock price recently dropping about 50%, and marking a critical time for the stock. Tesla has raked in huge gains for investors since 2019, and even briefly became a $1 trillion company as it built out its production capacity in an effort to meet the strong demand for its electric cars. The car company has continued to keep up with the demands even in 2022, despite the tough market conditions. It also increased its earnings exponentially in these years. However, things have not been so smooth for the company's stock in the past few weeks. The automaker's stock recently closed at less than half its closing high back on November 4th, 2021, leading some investors to wonder whether now may or may not be the time to take a closer look at its stock. This constant drop in value has caused panic amongst investors, some of whom are starting to sell their shares for fear of the stock value crashing in the future. Guys like Gary Black believe that if Tesla does buy back its shares, it's going to increase the value of them and generate a high return for its investors, which is one main goal of a profitable public company like Tesla. Citing Tesla's current financial position, Black stated that with the company's $18.9 billion in cash and marketable securities and nearly no debt per its recent 10Q filing, as well as Future Fund's expectations of up to $20 billion in free cash flow in 2023, it could be a good time for Tesla to buy its stock. He wrote, at the October 13th, 2022 closing price of $221.72, and assuming 2030 non-GAAP earnings of $42 and a 30 times PE, we calculate an annualized internal rate of return of 24%, well above Tesla's after-tax return on cash or new debt. Even on our 2023 non-GAAP earnings of $8, buying back Tesla shares offers a 3.6% earnings yield, which is higher than Tesla's after-tax return on cash in the first year. Gary Black believes that compared to paying dividends to Tesla shareholders, buybacks still have favorable long-term capital gains tax treatment that can easily be managed. Likewise, Tesla investor and chairman, Xi International, Leo Kogoan, also supports the idea of Tesla buying back its shares in times of significant drops in its stock price. The Tesla shareholder had previously called on Tesla to announce a $15 billion stock buyback when the company's share price was dropping in May. Kogoan stated that Tesla should immediately announce its plans to buy back $5 billion of its shares this year and $10 billion next year. He added that the automaker could use its free cash flow to fund the buyback. Early in October, Kogoan stated via a tweet that Tesla's declining PE ratio can be solved only by buyback and by increasing earnings to twice its value. Sometime after this, Musk replied, "Noted," signaling a possibility of Tesla allocating some funds for its first ever share buyback. What does this mean for its investors though? Keep watching to find out, and don't forget to like and subscribe if you haven't done that yet. Aside from driving up the prices of Tesla's stock, the buyback can also help to generate funds for Musk's purchase of Twitter. So now may just be the perfect time to buy some shares, especially since he's already been given until October 28th to honor his $44 billion deal with the social media platform. However though, if Musk will be selling some Tesla shares to fund this purchase, it's uncertain how many he's going to unload. Also, not every analysis supports a share buyback at the moment. Since Tesla is a capital-intensive business, using its capital reserve or issuing debt in order to finance a share buyback can be somewhat risky. Suppose in the future the company needs funds to finance its project. It will have to incur debts, putting the car company in more vulnerable conditions and weakening its financial position. Although a share buyback may be a good idea for some companies, it's a rather risky one for someone like Tesla. They're already vulnerable to changing market conditions, so some analysts believe that other than focusing on Tesla's stock value, what really matters is Tesla's execution towards making products that people want and investing in new products and markets that will boost the company's growth in the future. Some others also think that buying back shares impedes a company's ability to grow, but Gary Black disagrees with this view, adding that share buybacks only come after all internal operating projects are funded. According to Gary, financial options like retiring debt, acquisitions, dividends, or building up cash cannot offer a return on investment that is anywhere near the returns on buying Tesla's own stock. He further cited that companies like Apple, Google, and Microsoft have all employed this consistent buyback strategy for years, with positive results thereafter. If Tesla does decide to buy back its shares, there are several valid arguments to justify the move. One of which is that buying the company's own stock does make sense, as the share price is weighed down by external factors, especially ones that are beyond Tesla's control. In Gary Black's open letter, the Tesla bull stated that over the next 3 years, he estimates that Tesla will generate $10 billion in free cash flow after all operating investments, adding that a buyback worth this amount would have almost no impact on financial flexibility and would send a powerful signal that the board takes seriously in its role of a driving shareholder value. Tesla is gradually reaching its goal of 50% annual volume growth target, and so its stock trading at critical lows doesn't properly reflect the automaker's strong financial status. Also, Tesla has a large community of retail investors who are going to benefit greatly from this rise in company stock price, if ever the company does decide to opt for a share buyback. What's your take on Tesla? Do you think that this is the best way to increase Tesla's stock price? Let us know down below, and don't forget to tell us what your valuation of Tesla is. If you want to know what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there!